Hello and welcome to Other People's Money on RVN TV. I'm Doug Bloom, I'm your host. Thanks for joining us today. On Other People's Money, our guests share their insights into the world of wealth creation, investment, finance, entrepreneurship, and philanthropy. Before we begin, please let me remind you that on Other People's Money, we are here for entertainment and information purposes. We're not advisors, so any ideas you get about management or investment, please run by your personal advisor before taking action. That said, we have a great show today. Our guest is Erik Strid, the founder and CEO of Concentus Wealth Advisors in King of Prussia, Pennsylvania. Erik, that one always gets me. Erik and his partners founded CWA because they are passionate about creating a more impactful experience for clients than what Wall Street banks typically offer. Erik grew up locally where he excelled in sports and went on to study economics at Amherst, where he was captain of the football team as well. Upon graduation, Erik began his career with Merrill Lynch, where he grew his experience and his client base over a 10-year period. About 17 years ago, Erik left Merrill to join with his father in creating Strid Wealth Management, which they have since morphed into Concentus and have more than $1 billion under management with a lot of clients that look like you and me. Under Erik's leadership, the Concentus team has published books, appeared on TV, is featured and quoted in many notable publications and media outlets, has collected various industry awards. It's been a great run for Concentus. And so, Erik, I have to ask you, first of all, say welcome aboard. I'd shake your hand, but you're not with us physically here. What does Concentus mean?
The word consensus means harmony in Latin. When our firm is very values driven. We're believers that values drive all of our behaviors, and that it's very important to understand what your values are. So our mission is to help our clients to develop and implement a financial strategy and plan that's consistent with their family's values. So the word consensus means harmony. So you are planning in harmony with your values.
Excellent. So what experience has been the biggest influence on your way you lead Concentus today?
Well, I would say all of my cumulative experiences are really important. I think probably, we're here to talk about investing, and I think that my, almost 30 years now of watching investors and how they behave. It's actually longer than 30 years. My father is part of our firm, and he started his career as a stockbroker in Philadelphia way back in 1967. So growing up, I was always fascinated by his career. And so I feel like I've been a student of markets for a heck of a long time. And in particular, not just markets, but really behavior and psychology, investor psychology has been something I've been fascinated by. And really, in terms of how we lead our client relationships, is really a tool that we lean on quite a bit. Our whole philosophy of advice is built around developing the temperamental qualities that lead to long-term investing success.
So I would say your firm endeavors to be experts in behavioral economics. Is that a fair statement?
Well, as much, behavioral investing, I would say yes, absolutely. That we have a very solid, firm belief that while most people believe that investing is a scientific process and that it's a numbers problem, right? It's absolutely not. Investing is a temperamental problem. It's a problem of emotion and controlling our emotions in the face of fear and greed. I mean, particularly looking at the environment that we're faced with today, it's a case study for our belief about capital markets.
Well, that's where I was going today. As we talk today, we are facing the coronavirus pandemic as its impact on the United States and on our economy. Our markets are having a very extraordinary day, where equities are falling, bonds are falling, gold's falling, oil's falling, except the dollar's going up. It's an interesting market. So what do you tell people today? I mean, you just mentioned that investment is an emotional experience with a numbers background. more or less that's what you said. And so how do you counsel people, and how do you help them get beyond the fear that they're feeling about and the fear of not doing anything, the fear of doing something, et cetera, et cetera? How do you work that?
Yeah, so we have a phrase in here that it's okay to feel the fear. It's just not okay to act on the fear, right? That to be an effective investor, we have to find a way to make rational decisions in the face of fearful conditions. And by the way, we're not talking today about euphoric conditions, but I've lived through those too, and those are equally can cause havoc on our decision making because of our emotions. But today we're dealing with fear. Clearly the human mind, when it's afraid, rationality goes out the window. So I would say that, first of all, we root our advice and our decision making in the realities of history, right? If we want to understand the way stock prices are likely to behave now and into the future, it's probably a pretty good idea for us to understand how they've behaved in the past, and to understand, capital market history with some sense of rationality, right? And if we can do that, we can look at the conditions that are in place today objectively, okay, and understand that it's highly likely that they will resolve themselves in the same way that similar conditions have resolved themselves in the past. So let's try to do that. Let's try to set aside our fear. And by the way, so let's deconstruct what's happening right now in light of prior times when something like this has happened. Okay. First of all, people are afraid about the stock market, but it's never just the stock market, right? People are afraid they're going to lose their job. People are afraid they're going to die of coronavirus. People are afraid that their father or mother is going to die of coronavirus. So there's a cocktail of fear. It's never just the fear that the stock market's going down. In 2008, it wasn't just the fact that the stocks were down 57%. It was the fact that everyone was losing their house and everyone was losing their job. And so that's one thing. The second thing is that, as always, the media their job is to fan the fear, to fan the flame of fear. So the media is not our friend in this particular environment. So be aware that decisions we make and the way the stock market is behaving is most likely being influenced by a level of fear that's probably not realistic. Okay, there's too much fear right now. Okay, should we be fearful? Yeah, there's a lot of bad stuff happening, but there's too much fear in the air right now.
Agree.
Right?
So somebody walks into your office and they had a $400,000 401k. It's now down to $300,000.
Yes.
How do you get them beyond that? What do you do?
So back to, first of all, our job, and we do it constantly, is to constantly educate our clients before today that this is going to happen. Okay, so for the last 10 years, while things were going well, every meeting was, let's talk about how stock prices behave over time. And this is how stock prices behave over time. It's a very simple process. Over a long period of time, stocks are going to return something like 10% on your money. Okay? You wait around long enough. Every year, they're going to decline by something like 14%. That's going to happen pretty much once every year for the entire time. And recover. Same year. Recover, of course. Still producing that 10% return, by the way.
Yep.
But once in a while, every year, they're going to decline by about 14%. About every 5 years, they're going to go down by anywhere from 30% to 50%. Okay, that's what we call a bear market. That's happened 20 times since World War II. This is not the first time stock prices have been down 30%. I know everybody feels like this time is different. This has never happened before. We've never seen this kind of volatility before. These are all phrases I hear on an everyday basis. No, this has happened plenty of times. I've lived through 2 of them. Okay, so that's what's going to happen. When those times happen, stocks are going to recover. Okay, it can take some time for them to recover, but they'll get back to even, and then they'll move to a new high. What is important is really to understand, if we are going to live through a period of time where my stock portfolio is down 50%, how long am I going to have to wait until it does recover? Okay, because that can then give us the key that unlocks the door of fear, which is time horizon. I know, which I do, that historically when bear markets have happened, they've recovered within 40 months. So the average bear market since World War II, peak to trough, back to break even, has taken 40 months, round trip. So what I say is, do not put $1 of your wealth into the stock market unless you can afford to live through a period of time where they're down and it takes them 5 years, 40 months to recover. Don't do it, because that might happen, that's going to happen. Like, let's be grown-ups.
So that's part of the education you do with your clients. So you have them look at different baskets of capital then to say, this is long-term investment, this is medium-term, and this is immediate, and I cannot afford to put this into assets which might be down 30%.
Something I did the other day. In everybody's wealth, there's a whole bunch of dollars, okay? Some of those dollars you're going to spend next Friday when you go to Starbucks, okay? The dollars you spend next Friday when you go to Starbucks, you don't really have to worry so much about inflation, because a venti's probably going to still cost $4 next Friday, okay? But you also don't want to invest the dollars you're going to spend next week in something that could fluctuate in value, because next week you want that $4 to still be $4, okay? Because you want to buy the venti. If I'm going to take a cruise when I'm 80 and I want to take my grandchildren on a cruise, it's going to cost me 25 grand, okay? I'm 50 now. Well, then I do have to worry about inflation, because that cruise is probably going to cost me $60,000 by that time. So I better have an investment that's going to produce a return that will help me keep up with inflation. But I got 30 years to do it. So those dollars I can put into something that will give me the return, the 10% return that equities have given me, but I can afford to watch them go down by 30% temporarily and wait for them to recover, right? So the game of investing, in my opinion, is all about putting the dollars that you intend to spend at various points in the future into asset classes that are most appropriate to that use. If those dollars are going to be used in the next 40 months, you better not put them into something that could be down 20%.
And the responsibility that you have as an advisor is to make sure you have the dialogue with your clients, so that when that 25 grand grows into 60 some year down the road, whether it's yours or somebody's, they know to remove it from the markets, remove it from exposure, so they're not sitting today with only 40 grand instead of 60 grand.
I mean, in our practice, we've got a whole process for that. I mean, basically, we bucket dollars, and every year we look and we say, there's your 5-year bucket, and your 5-year bucket has to be safe, has to be in treasury bonds and cash. And then everything else can be in your long-term bucket, and that can be in equities. It's going to get you that 10% rate of return. And every year, you spend something out of the 5-year bucket. At the end of the year, we replace it.
Yep.
We just harvest out of our long-term bucket and replace it. Except for a time like right now, we don't harvest. We don't take out at a time when the market's down. We only take out if the prior year produced a positive return for us. So by doing that, we're setting ourselves up to only harvest when we had an actual crop.
Well, and to your point, and we're going to go to a break, that takes a strategy and a plan, attention, and that's what your firm provides. You're a guide, a shepherd through this process of building harmony between the individual and their investments, and also between the investments they hold and the strategy and the capital requirements on it. We're going to come to a break. Eric, real quick, tell everybody how to get in touch with you if this is all they watch.
My direct phone is 610-994-9192, and I can be emailed at Erik, and that's Erik with a K, .Strid, S-T-R-I-D, at concentuswealth.com. That's CONCENTUS wealth.com.
Great. We'll be back in a minute. We're talking with Erik Strid, CEO of ConcentusWealth.com. Thank you.
As an organization is to make sure that we have the right people in the right chairs doing the right thing. To do that well, you have to have synergy. You can try to dream up ways to make sure that your group does that, or you can rely on experts. We would recommend BCAP Partners to anybody who's looking to take their organization to the next level.
I want to be a contender. I want a warm belly to sleep on.
A big house.
How do I look? Do I look good?
I want to play hard.
My nails done once a month.
I want.
I want a home.
I just want a home. I want someone to love.
Last year, more than 30,000 companion animals came to us without homes. 20,000 of them were felines. Let's make some homes together.
Hello everyone, I'm Mark Iorio. I'm the host of Rainmakers Roundup right here on RVN TV. The show is about looking for people who are in competitive businesses that are...
Hello, welcome back to Other People's Money on RVN TV. We're speaking today with Erik Strid, CEO and founder of Concentus Wealth in King of Prussia, Pennsylvania. We're sitting here today with a crazy time when the coronavirus and its impact on the U.S. economy, investors, and people's job statuses, et cetera, are all ill-defined. It's still being worked out how the country's going to respond and what actually is going to happen. Erik, we're in crazy times. How do you get your clients to get their heads around that? What do you do? How do you help them, and what would you offer to them today?
So, as we were talking about a minute ago, hopefully and fortunately for us, we have been doing this coaching. We do this coaching. We tell our clients, don't think a 30% correction in stock prices might happen. Know that it will happen. That it's going to happen. And so now that it is happening, even though as many times we might have warned people it's going to happen, they're still freaking out. But then also, we've also coached them to remember the reason you stay in when that happens is because the recovery will be rapid and significant. And in the once it does recover, it'll move on to newer all-time high and all-time high and all-time high. The story of the stock market has always been, for every one step backwards, there's 3 steps forward. So be patient and wait for the 3 steps forward. So one of the things that we are talking with people about now is to think about their emotions and to think about what's happening right now as objectively as they can. And I would just say that this is a classic situation. It's a classic bear market situation, and we're hearing classic comments from clients. The first thing that we all say, and by the way, we were just talking about this a minute ago, but when we experience the kind of distress in the market that's happening right now, from what I call an exogenous factor, okay? As I always say, people don't somehow believe that companies like Starbucks and Exxon and Microsoft and Apple are all of a sudden worth 50% less than they were worth yesterday, okay? It's because there's an exogenous factor. There's something that's outside of the economy, sitting on top of the economy. It's causing us all to believe that this time is different. So whether it was 9/11, whether it was the H1N1 or the bird flu or the SARS epidemic, whether it was Hurricane Katrina, these exogenous factors are always the scariest ones because we don't understand them. And in most cases, none of us have ever lived through anything like this before. So our first tendency is to say this time is different. This has never happened before. Well, in fact, this has happened before. In 1918, there was a flu that went around the world that killed almost 2% of the world's population. Not 2% of the people that got it, 2% of the population of the world. Okay? And then in 1958, there was another very terrible flu that happened that was much, much worse than coronavirus has been. And then in 2009, H1N1, not many of us remember that, but 20 plus thousand Americans died from it. So something like this has happened before. The stock market has declined by 30% before. These things all have happened, okay? They all have passed, just like this will pass. Our tendency when we are afraid of an exogenous factor that no one understands is to believe that this is the one, this is the thing that will cause the L shape, right? We go down and then we never come back. Well, all I can tell you is that every other time in the history of our country, it has come back, okay? And it's going to come back this time. The other thing that's probably important to understand, because also a lot of people say, well, wouldn't it be smart to sell a little bit now or sell everything now and then wait for the storm to pass? Well, what I will tell you, and I tell you this from personal experience, from actually making this mistake myself, is that the odds are overwhelmingly in favor of you buying back your own portfolio at a higher price than you sold it for, okay? So what will happen, and I will promise you this will happen, I don't know when it'll happen, and I don't know how much further the S&P has to go until this will happen. The S&P 500 will hit a low. And on the day it hits the low, the news will likely be at least as bad or probably worse than it is today, okay? March 9th of 2009 was probably the best buying opportunity in the history that anyone alive today will ever see. And that day, the New York Times did not have a headline that said, hey, everybody, the coast is clear. That day, the New York Times had headlines that were, the world is coming to an end, okay? So it will still look terrible. The news flow will still be terrible on the day the S&P 500 bottoms. So the S&P will bottom before the case count will bottom. It'll bottom before the death rate bottoms, okay? And when it does bottom, the recovery, as it always is, will be an inverse relationship from a force standpoint to the decline that preceded it. So in other words, in 2009, the first 6 months of recovery, the stock market was up roughly 35%. It will make your head spin how quickly the recovery will happen, okay? This is how it works. This is the game, okay? So watch that and learn from it, because then you'll remember the next time this happens, oh yeah, I get it. This is how it happens. And if you can be armed with some of the information I'm telling you right now, that recovery will happen, that 5 years from, so we hit a high of 3,300 on the S&P 500. Well, if my 5-year rule is true, that by the end of the next 5 years, you'll be back to 3,300.
Well,
so what does that make 2,300?
It may be even quicker than that, though.
That make that, pardon?
It might be even quicker because normally it's 3 to 4 months to get to a bottom. We've done it in 3 weeks.
Way quicker. But I'm just going by history. Right?
Agreed. I'm just saying the acceleration in the market right now also scares us, the bejesus out of everyone as well, because it's moving so quickly. It might have established a bottom. We don't know if it has, but it's moving so quickly that people they extrapolate that it's going to move even quicker and further.
Let me ask you this.
Excuse me.
Okay, with so a 10-year bond right now, a 30-year bond right now yields 1%?
Less than 1%, yeah.
Okay. So if I were to tell you that I've got an investment that, based on history, has almost a guarantee that 5 years from now it'll be 30% higher on a price basis, and in the meantime it's going to pay you a cash flow of 2%. Which do you want to have?
I'm with you.
Which one do you want?
I agree.
So armed with that kind of an analysis, suddenly an investor's mindset can go from fear to opportunity. I mean, I wish I had more cash, right? I mean, I have a 5-year time horizon. We're calling clients, go home to the cushions in your sofa and find any money that you can and put it into the stock market right now. I'm worried that the sale's going to end soon. I'm worried, and I'm telling you, this is the other thing that's happening right now. The stock market is pricing in months of complete economic lockdown. And that's what the media is saying. I mean, that's what the Treasury Secretary is telling you, that we're going to live like this for months. There are drugs that are being used today that are in India, China, and Australia that our doctors are claiming are a cure for this disease. That someone takes it tonight, tomorrow morning, their symptoms are gone. Now, I'm not a scientist and I'm not a doctor. I know there are processes for approving drugs, but that's happening today, okay? This is not going to be months of lockdown of economies, okay? It's going to be damaging, but the stock market is pricing in months. So I'm worried that I can't get my clients to invest more cash before that drug gets announced. Because watch what happens when that drug gets announced.
Well, your point you're making is timing is everything. You can be right on the market in terms of direction, but even on the timing, you can sit there and take a lot of pain or miss out on a lot of opportunity.
I will say, if that happens, the drug comes out in the stock market's at 15%, I will still be telling my clients,
buy. If
you have 5-year money, buy.
Yep.
Buy. But right now, stocks are on sale. I mean, you know, what are the... You ever hear the term buy when there's blood in the streets? You ever hear the term bear markets are times when stocks are returned to their rightful owners?
I have.
Hey, Mr. Investor, let's actually... That's such a nice platitude to say when the S&P 500 is up 15% in a year. When it's actually time to pull the trigger with an S&P down 30%, do you have the chops to do it? And so the temperamental qualities of a great investor, Warren Buffett is not a great investor because he knows how to recognize value in a company. He's a great investor because he knows to buy when there's blood in the streets. Look at what he did in the fall of 2008. What was his activity? He was buying everything he could get his hands on when everyone else was selling anything they could get their hands on. I mean, who better to learn from?
And so I'm gonna put this, because we're getting towards the end. We have one more thing to do. The key to an investor who's trying to weather the storm, if they have an advisor such as Concentus, you can talk about it. You have a strategy. You have advice. You can show them the mathematics. You can deal with the behavioral finance at a core level and get into the issues, the emotions that are driving decisions or not making decisions. And so if you're out there alone and you're trying to weather these markets yourself, get an advisor and consider Concentus is what I would say. Erik, once again, tell everybody how they reach you.
My direct phone is 610-994-9192, and I can be reached by email at erik.strid, it's Erik with a K, .strid, S-T-R-I-D, at Concentus Wealth, and that's CONCENTUS wealth.com.
And Erik will meet with you at a 6-foot distance. He's in King of Prussia.
For now.
Erik, there's one thing we do on the show. We do 6 questions, the same 6 questions to everyone. Your immediate first answer that comes to mind. Are you ready?
Yes.
When you were a kid, what was your dream profession?
I wanted to be a teacher.
Teacher. That's admirable. What is a bucket list destination for you?
Pass. I don't really. I've been so many great places.
Where's the next place you're going to play golf?
Most likely Philadelphia Country Club, because right now that's the only place I can get to. That's my home club.
All right. Which of the following questions is most interesting to you? Who, how, when, or what?
Why?
Because I asked.
why you didn't say why, but why is much more interesting.
Understood. What motivates you more, loving to win or hating to lose?
Hating to lose.
Okay.
That's hard than ever.
Besides your own, what's a company that intrigues you?
Fisher Investments.
Okay. And what's your most endearing quality?
I think my empathy.
Awesome. Erik, I would shake your hand today, but I can't, so that saves that awkward moment. I want to thank you for being on the show with us today. You guys at Concentus do a great service to your clients, and I really enjoyed speaking with you today about how you go about it. Thank you.
Absolutely. Thank you, Doug. Happy to be here.
Cheers. Be safe.
You too.